Good evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Meltdown Monday, September 20th, 2021. So what went on? Well, September has a history of being the worst trading month of the year. We broke down, this is a 3-week break low in many of the stocks and stock indices. The market will give you all kinds of reasons. It could be that maybe we don't get the budget plan. It looks like that's a big problem. Will the government shut down? I would rate a chance of it at 0, but you never know. It could be that maybe the infrastructure and the reconstruction plan, they don't get done. You don't know. It could be that Evergrande meltdown in China, but we don't have really exposure to that in the United States. But it's a cause. Market melts down from that. Maybe it's just that the market finally needed a correction, and I think that's more or less what really went on. When we take a look at the chart action, you can see that even ARK coming back down, a new low for this move. So it hasn't been back here since early August. And now the market's probing those lows. In terms of a trend, there isn't one here. We have a lower low, a higher high. When you take a look at moving averages on the way up, and I'm going to come back here because we were talking about this. This was your downtrend. If you got over this high, I had stated that, okay, that breaks the downtrend. You have no trend at this point. You have resistance at the 18-day average, support back at the 100-day average. You can see what the market did, but let's put on the Bollinger Bands because that also is a support zone. So as the market got back on Friday and got up to that 18-day average of closes on the way down today, market opened close to the 100-day average after you saw the break in the stock indices and everything let go. What are the odds of staying under the lower Bollinger Band? Just 5% of the time. So let's look at the momentum here. The momentum is still pointing down. You have an oversold market, though, because the reading's under 30. So I have an oversold market, the momentum down, you're not trending, and you're near the lower Bollinger Band, which has shown a historical evidence of supporting the market. I am not saying it has to turn on a dime from there. That's what my statement is. The market's at a support area. When we look at Apple, you went right on through that band. Now, you don't do this very often. In fact, if I step back, when's the last time we saw the market get down there? And I'll stand by with what I had said. Remember, we were talking about the release of the product. When it came out, I said, it's not enough reason to buy an Apple phone unless you're a camera buff. And I'm standing by that. So when I looked at it, I think the market agreed with me. It's just not there. There's nothing revolutionary. It's not flippish in style. Their new chip is nice, but you do all know we don't really have 5G over most of America, so you buy it because you're hoping you can get the better speed. But how many of you actually have 5G in different parts of the country? You know what I'm getting at. That part is not there. So I was looking at this and saying, okay, I could see a reason for it to sell off. That doesn't mean I'm long-term bearish, but there's the sell-off I was hoping for. Obviously, this influences the NASDAQ and other parts of the market. Oversold under the lower Bollinger Band. You can stay about 4 or 5 days under it. It's rare, but you could. You'll move to the right-hand side in time, but this is the washout phase. In PAVE, the more I keep hearing, we don't have the Democrats on board. Forget the fighting Republicans against the PAVE and against the budget and all the other parts. The Republicans are one element. The Democrats within their own party, Miss Pelosi, she's a juggler. How do you get everybody to say, okay, let's do an infrastructure bill and let's do a budget and we'll separate it in some manner for that reconstruction bill when the reconstructionists are saying, no, we won't do that because it'll never get done. So magic is what has to happen. You may even see that they'll say, okay, let's pass the infrastructure bill, but never send it on out of the House. That could be a compromise. But what they do is Miss Yellen is there going with her bugle, folks, the end of the month is coming. We don't have enough money in the Treasury to go very far without starting to shut things down in October. And people want to tie the budget to something else. Generally, what they end up doing, because this is so serious, that you will not get a budget done. What you will get is an extension of some type, probably, to get money keeping the economy going as they fight all this out in Congress. That's just my guess. I'm probably wrong, but that's how I think it's going to play out. That doesn't help pave. XLI, the industrial sector, got smashed. Now, here is your 200-day moving average of closes. I was watching today another analyst from Morgan Stanley, if you're watching Bloomberg early this morning, and I am guessing, I'm talking early, it was well before 8 o'clock Chicago time. He was pointing out why he's bearish at this point and how often, if you take a look at the 50-day average and the 200, and I'm showing you the 200, I don't show you all the moving averages here by any stretch of the imagination, that hitting it the first time's often the support area, but if you get away from it, you come back through it, you break again. Morgan, as he was talking for them, is looking at an overall correction that could be 20% in size. That doesn't mean they're right. That's a bunch of scenarios coming together, but so far, being safe, not sorry. You know, even if you go here, you peaked out at 106, you're back to 97. It's a heck of a break. It's about 8% or so. XSD, you broke down in the semiconductors. They were looking okay with one exception. Let's go back one more day. This is embedded. Now, Friday, this is Thursday. What happened Friday? You lost the embedded reading. What was the number? Under 79. What do I tell you here? I teach you in the Enhanced Bollinger Band course, and take the course if you want to learn what it is. It's only 13 chapters. It's on the website. At the reading under 79, get out of all longs. Every long you have in this index, okay? Why? The odds are at a minimum you're going back to the 18-day average to regroup. I didn't see this coming, but I did see to be out. And boom, right down to the lower band, that should be the support zone. But you're out of that uptrend. PODX, I said how bad this stock is, or this ETF is, and you can see it just keeps leaking. These are new lows for the whole move. Even a bad market can't get this stock market to a new high. Makes sense? I like that play on words. Very bearish if you take a look at it still. The home builders, okay. I saw today the home builder index, that went up to 76. It beat the estimate of 75 in last month's reading. The home builders feel better because interest rates are stable at this point and material costs have been coming down. Their problem is that home prices aren't coming down. And if home prices aren't coming down, how do you save up enough? I realize that the spread of the lumber cost in there is fine, but where does that go? Are you telling me that the home builder's passing that on? I have my doubts. So still pressure in the market. Now you've challenged the 100-day average, the lower Bollinger Band in an oversold condition. What do I teach? I teach that's where the pros likely are covering anything that they've been short. And this trend has been down for a while. And today was what I think a culmination where the market, I'm not saying it's turning on a dime here, but I think that's where the pros are coming out of their shorts. In the energy sector, as the market went up to the upper Bollinger Band, and I told you that's where the pros came out, the first challenge of it, today you go to the lower Bollinger Band. I'm going to repeat myself, just a different word. That's where the shorts are coming out of the market, in my opinion. So you're in this trading area and caught in the Bollinger Band. See the black lines? That's really what you're working within. Then we get to the emerging markets, and I can see this offering more pain rather than just letting people off the hook. This was the darling of the markets in January. We were going to see this market shoot up to dramatic highs. Instead, it's coming down. I frankly see major support at 77.65. The 200-day average. That's not a reason to go long. It's a support number. The market's also extended itself because it's under the Bollinger Band. Over the next few days, it'll try to get back within it, but it's most likely going to come at the expense of the lower Bollinger Band falling and this number stopping its decline and trying to move to the right-hand side. In the gold market, if you'll recall, this was one of those patterns where you get hurt. And that's what I want to make clear. You get these big breaks, and if you think you're going to stay under that Bollinger Band very long, then you better read up on what this algorithm's about. And the market started coming back at you on Friday, and today, okay, a bid. But you're not in a trend. You have a higher high, lower low, and you're oversold. Let somebody else play with that. In the gold miners, no trend. You got the higher high, the lower low. You now have 3 days in a row under the lower band. Let's see, I'm going to guess. My own instinct is that by the close of business Wednesday, this market will be close to, if not over the right-hand side of that. That is not a bull sign. It just moves back in there. It can be working its way lower on that right-hand side. This is an ugly market that is oversold as can be. There's no edge in the market here. TLT, every time we've gotten up to this Bollinger Band, we have failed. So if you want to play that it's going to keep going, I get it. For the one time you might be right, great. That's where I think the longs, the pros are out of the market. The market came in like this. Let's look at what the pattern was. Higher lows, higher highs over the 18-day average, but it had a problem because momentum was turned down. This market was not in sync. It caught the news of what was going on this morning, and you saw everything just take off. Remember, I get up early, and I'm looking at the stock market, and I'm going, it's 400 points lower. Well, what's going on? And then I looking again, it's 450, 500, and I'm watching it. We got nearly 1,000 points lower in the Dow. I mean, that was quite a break. In FXE, the market is down to the lower band. It's trading basically in a broad swath here, caught in those Bollinger Bands. We'll see where it carries us. Now, this Wednesday, I am holding my live webinar. So that's at 12:30 p.m. To sign up for it, you see this up here? This icon? Click on it. It'll take you to the sign-up page so you can get that all done. When you sign up, you'll get an email with your user ID to get into it. Remember, send me your questions well ahead of time. If you're going to start asking me questions on spiders and ETFs during it, and you're expecting me to go get them and put on all the studies, not going to be easy for me. Let's make it easy for all of us. Do that. Again, just click on right here. You'll get it. I did send invites if you're in our mailing list and if you've opened recent emails. If you don't open the emails I send out, over a certain period of time, we stop sending them. So we do see how many people open what we send, then we just take you off everything we've got. So hope that helps you. I will see you all tomorrow. Take care.